Hey, what's up, guys? So today's trade during Asia was on gold, and the system yielded a 4.6R, which honestly I'm very happy about. This morning during New York, if you watched the past review, it was on Nasdaq, and we got a 5R trade. So following up with a 4.6R, honestly, it has me really stoked. I usually don't get excited about the trades because my focus is on just repeating the process and I try to keep emotion out of it, but I'm human and I thought this one was really sick today. So I want to get into that because I'm simply just following these 3 steps, guys, and I hope that if you learn the system well and follow it, that you'll be able to find trades like this. I do recaps almost daily. I try to do almost all my trades. The only times I don't is maybe I'm busy or whatever, but just trying to show you that it's simpler than people make it out to be, as far as like the technical side goes. I will say the hardest part for me in trading is the getting over that hump of learning how to control your emotions and stick to a system regardless of what happens, right? The easy part is the technical side. Like me giving you this model is the easy side. The hard part is, can you execute it consistently, always within the rules, day after day, session after session, right? That's where your homework kind of lies. That's where you got to put in the time. But the model itself, this one is a great edge that you can use. I love sharing it because it makes my life easier spotting a trend and a trade, and it just gives you structure for reasons to get in and out, and that's all you need in trading. Once you have good structure and it's a good edge, your job is to be consistent with execution, right? So let's get into the technical side and how we found this trade. So it all started off on NQ. There was perfect. I have the reference. There was nothing going on here. Look at this sideways price action, right? As I mentioned in the previous videos, the system we trade is a trend following system, right? We trade with the majority of the traders. So when you get price action like this, you just don't touch it. Hands off. It's not worth the risk. You go to ES. We all know it's a correlated asset or instrument, so it moves very similarly and it's not worth it to trade as well. I did find a trend on gold. Whoops, what did I type in? Silver. And that's why we traded gold tonight, because there was nothing on NQ or ES. Now, 3-step process is always the same. We need a liquidity grab and then an established trend and simply our entry model. So if we zoom out on the 5, you'll see that the liquidity grab happened right here during New York. Why did we use this level? Because this one is a very significant level. I've noticed through my back testing, forward testing, and then my live trades that the farther back the level, I'm talking about like if it's from 3 days ago, 2 days ago, a week ago, a month ago, they tend to become catalysts for really strong moves in one direction. You have a liquidity, like if you use a previous day low, like this is previous day low, right, from New York. If we use that one, they're great levels, they're significant levels. But I noticed that the really strong trends tend to happen after sweeps that were from days ago or weeks ago. This one here was from March 24th. It was the New York low right there. So for me, when that got swept, I thought, awesome, we are going to get a very strong bullish or bearish trend, and it might happen during Asia, it might happen at the end of New York. I wasn't sure. This candle, in my opinion, does not count, guys, because this was a Trump news tweet, okay? That's why we had a crazy candle. So this to me was completely invalid. I just ignored it. It's hard to trade this, right? But going into Asia, I already had our check one. We had liquidity grab already checked off right here because it swept a significant level. Now we're looking for the established trend. Now, during the open, you can already tell this was pretty sideways. This was kind of like NQ and ES. There was not a lot going on, no clear direction. But then finally, we get a nice downtrend, right? We get a nice sequence. And does that mean I'm bearish? No. We would have needed to close beneath previous day low for me to trust that we were going to be in a downtrend, because we were kind of in this range. We were in this range of this large news candles, right? But we already had step one. So I'm just looking for a downtrend or an uptrend. And that ended up happening right here to this leg. Why does this count as an uptrend to me? Well, if we look into all these PD arrays, these purple boxes I have referenced, so the purple ones are only the uh, bearish imbalances, right? And these are all on the 5 minute one. So all of those got disrespected. And one thing is to inverse these, right? That doesn't necessarily mean I'm bullish, but if we inverse them with a lot of volume, speed, displacement, direction, that really tells me that buyers are in control. In today's case, it's the buyers, right? That they're really in control, at least in the short term, and that we're potentially going to have a trend in that direction. So we also created bullish gaps that I don't have reference here, okay? So let's just talk about, because we already talked about the inversions. After the inversions, or excuse me, during, we're creating all this bullish imbalances as well, right? Not only are we disrespecting all the bearish gaps, but we're disrespecting them with speed and displacement and creating bullish gaps. So for me, this is a very valid trend already. It's being formed. My last piece to the puzzle was this right here, this level. Why? Because this was the last high responsible for this last low, right? And there was some liquidity, buy side liquidity left open. It was a swing high. So I told myself, if we close above this, but it's a good closure, I'm convinced in the short term long direction, or the short term bullish direction, and I'm going to go long. I just need an entry model at that point. Our inversion gap, our respective of imbalance. So look at how we actually broke this structure, right? 5 minute engulfing candle. It wasn't like price struggled here. In fact, you go to the 1 minute, we had a beautiful displacive candle right here. Look at that. This candle is so much larger than all the ones next to it. This just tells me buyers are really in control because it displaceively broke through this level, got a good closure above it while creating a bullish gap. After all this that I showed you here, the disrespect of the bearish gaps, the bullish creations, I mean, this was the fine. This tied it up for me. I thought, dude, we're going long. I just need an entry model. And simply, I used this small gap because I noticed we were doing a retrace, and I thought, perfect. Let me just delete this to make something clear real quick. I thought, perfect. I'm going to use this one right here. And if we rebalance and close in the bullish direction, I'm going long. What ended up happening is we inversed it, but during the inversion, we created a small imbalance, a bearish one, and that would have given me a better risk to reward if I used this one to enter. So simply, we inversed it right here, 1251, and I got in on the next candle after. So that was confirmation, that was my entry. And simply, we targeted another significant level, which was a 5 minute liquidity zone, a buy side liquidity, right? That was left open. I usually go for 2 Rs. So why did I go for a 4.6? Because if the liquidity sweep that we had was an hourly level or a previous day level, I would have stuck to a 2R because those levels also start trends, after the sweeps. But like I said, if the level was like this one where it's, 2, 3, 4 days from the past, then they tend to start really strong trends. Therefore, I'm more confident in looking for a higher risk to reward, right? Or a bigger return, I should say. Better RR. So I saw this buy side left open, excuse me, and that was our target, right? So I hope that makes sense, guys. It's the same as every day. Liquidity grab, establish trend, and then we seek an entry model. This should give you enough structure to have reasons to get in and out of trades with the trend. Your job would be to be consistent with your risk management, predefining your risk before every trade. Example, this trade, because it was Asia's session and because we had a really good New York session, securing a 5R, I thought, you know what, I'm going to back it off a little bit and I'm only going to risk about $250. That was my risk on this trade, about 250 instead of 500, so it was about half risk. I think 260 with the stop loss size, and we just simply let it play out. Now this trade ended up being worth 1,000, almost $1,200 just in one trade. simply following the same process that we do every day. So I hope that makes sense, guys. If there's any confusion, I'm on X, Discord, here on YouTube. Comment, let me know what you guys think. And you can also watch all the past recaps. I do them almost every day, and they're always the same 3-step process. So just one more time, let me go through it. Liquidity grab, check. Established trend. We used bearish PD arrays and bullish PD arrays to find that trend. And then our entry model right here, the inversion of a 1 minute bearish gap, right? All right, guys, you guys have a good evening. Peace out.